part 3 of our revision video series. Now we are going to discuss about two very important standards here, standard number 315 and 330, and then we will also look at an insight with what we are supposed to do with the evidence series, right? So if you have been following this, the part 1 we discussed about quality control aspects in 220, and then we have also discussed about how does the auditor accept the audit engagement. So those two steps part of preliminary engagement activities, and then in the part 2 video we've been about how to obtain knowledge of client business. So after which we also have understanding of the planning and materiality aspects. So now is the time for us to discuss two very important standards, wherein 315 talks about risk assessment procedures and 330 talks about further audit procedures. So in this particular revision session, I'm going to take you through 315, which is risk assessment procedures. Of course, there is another name to the standard, which is the actual name. Risk assessment procedures is a short form because that is what the definition of those three aspects are. So this standard deals with three aspects. So let's go with the same thing here, SA315, going with all three aspects. Of course, there is a fourth aspect that we will deal later. For now, we are talking about first part. I think we already did understanding entity and environment. Understanding entity and environment. So which is what gives you an insight about what are we supposed to do when we are trying to understand the entity and environment. Then based on this, I hope you remember the 5 points that we've seen in the last session. What are the 5 points? Relevant industry, regulations and external factors, the nature of the entity, accounting policies that they are going to use, and objectives of the entity and associated business risk, along with also the way entity is structured and how it is financed and the entity's financial performance. So these are points that we have looked up there. Very important. I think you can go back to your obtaining knowledge of the client business notes to see what you do to understand the entity and environment. So part 1 of 315 has already been discussed. Now comes the most important part. Right now that you have the understanding of the organization, and you also have the understanding of what items are material, which we discussed in the last piece. Now is the time for you to understand what are the internal controls. So I'm going to take you through 5 very important points to have a complete understanding of what internal controls are. So part 2 of 315 deals with understanding internal controls. Understanding what? Internal controls. Now this is where it stretches to importance, and understanding internal controls. This is a very important piece as far as internal controls are concerned. Understanding the internal controls, first and foremost step that you will have to understand is, did they really set up any controls? Did they really set up any controls? If controls exist in that particular client of yours, such an environment is called as control environment. So all we need to try to understand first is control environment. And if you remember, at this point I would like you to remind the 3 A's: attitude, awareness and actions of the management, which will determine whether they are setting up the controls in the right manner or not. Attitude, awareness and actions. So that is what we need to have an understanding of whether controls are there with our client or not. So attitude, awareness and actions of the client is what we are actually looking at in this particular case. Understanding the internal controls, wherein you have proper and clear understanding of the control environment. That is what we are actually doing here. Attitude, awareness and actions, so which give you an insight about what you are actually trying to do with the client, right? Then talking about the next area, once you understand whether your client has a control environment. Now guys, logic is very simple. If your client has a control environment, which means they have the attitude towards setting up controls, they are also aware where to set up controls, and it also means that we have to check. Now they said actions, but did they really set up controls? For that, we are doing 315 now as part of audit. But do you think this kind of a risk assessment process would have already been performed by the entity? They should have, right? So that is why point number 2, what you're trying to understand here is entity's risk assessment process, not ours. Entity's risk assessment process. So trying to see what the entity did. entities risk assessment process by trying to understand. Now if they really did and then they set up controls, we will go by that. If they haven't done that, then of course we have no option but to do risk assessment by ourselves, right? So control environment and then understand entities risk assessment process. Now wherein in risk assessment process we are talking about, if yes, take their understanding of what they did, if no, you try to do that risk assessment procedure. Now moving on to point number 3, which is a very important point and it has to be done in detail, understanding the information systems. Understanding the information system. Now this gives you a thorough insight about what you are supposed to do and how will you be doing all that, right from what kind of transactions the company is involved into, what are the basic journal entries they pass, what sort of computing accounting system they are using, what are some of the material journal entries that have controls, everything about the information system, how many transactions do they attack in a day, every complete detail about how transactions are happening, and right from what class of entries they pass to every possible thing about what kind of information system they use, all of it with respect to the complete information system, whether they are using manual controls in some places, whether they are using completely automated controls, or are they using IT dependent controls. All these are some points that we need to try and understand. So this gives you a complete insight about the entire entity's information system, and that also gives you a knowledge of what are the gaps involved in doing this. So control environment, entities risk assessment procedure, and also having an understanding of what the information system of the entity is. Now once these are clearly done, this is exactly where you have a lot of insight about what to do. But then I would like to take you through two very important points. See, as such, the term internal controls is not restricted only to the areas of finance. So as point number 4, which I am writing here, the auditor should understand controls relevant to audit. Controls relevant to audit. Now what do you mean by controls relevant to audit? Because there are so many internal controls and some of them may not be relevant to audit, the auditor has to select and apply all his procedures on those controls that are very much relevant to audit. Nothing much serious in that point. It's a very straight and simple point. Out of several controls that are there in the organization, you might want to see only those controls that are pretty much relevant to the audit. And moving up next is point number 5, the last one. It is the duty, you all know that it is the duty of management to set up the controls, right? So they have set up the controls, but are they monitoring from time to time? Monitoring is also another important aspect. Okay, so if you have, of course, these 5 points to summarize are very simple, but it does take a lot of time to have a thorough understanding of each of them, because it's going to consume so much time. You can't just walk into an organization and say, let me do this, right? So you will have to obtain a thorough understanding of what exactly these internal controls mean to the organization and how exactly are they using internal controls to deal with, right? So this is the understanding part of 315. So if you see the 315's title, it is identifying and assessing the risk of material misstatement through an understanding of entity and environment. So if you have understood entity and environment part 1 and part 2, you're taken care of. But at the same time, it is also important for you to use all of this knowledge to do part 3 to the standard, which is all about, I'm taking it here, right? Identify and assess the risk, which is a very simple process because there are only 4 steps. Identify and assess the risk of material misstatement. Step number 1 is to identify the risk. Step number 1, identify risk. Step number 2, once you know what to identify, step number 2 is about assess and evaluate. Assess and evaluate. Identify and assess the risk, assess and evaluate. Now if by this stage you will be able to understand how big the risk is. So identify the risk, assess and evaluate. And 3, now is very important part. Every risk that affects the organization may not be something that can seriously impact. Okay, it is forming part of the risk list, but doesn't mean that it will be such a serious risk. So you have to identify how important or serious a risk is depending on what that is. That is where you can see have to understand, see what can go wrong. This WCGWs are very important. At assess what can go wrongs. If there are many things that can go wrong, then there is sheer weakness in internal control. Despite setting up that control, if many things can go wrong, still what's the whole point in setting up the control? That will be the question. Identify the risk, assess and evaluate, see what can go wrong, and most importantly, the fourth and the last step, consider the likelihood. Likelihood is nothing but the probability. Likelihood is probability. Now, every risk that is there necessarily need not mean that it has to happen, right? So you consider the probability of such a risk's occurrence. That's it, guys. What you see on screen is what the entire part of 315 is. Of course, I'm going to take you through two very important points apart from these three parts, but these three parts justify the title of 315, which is about risk assessment procedures, identifying and assessing the risk of misstatement. I hope you got a clarity on this, right? Apart from this, what can pop up in the exam is another very important question, which talks about significant risks. Okay, so let's now talk about significant risk. I hope everybody has taken a note of this. If you're using notes to make notes, if you're taking screenshots and later want to do that, everything as per your choice. These videos are to make your life convenient from the perspective of the exam. The idea of making it short like this, an idea of doing this is to kind of bring it that ease and comfort in your preparation, right? So do this. And then moving up next, the two parts to 315 to conclude here are, moving on, stand number 315, continuation. After those three parts, you got two more parts which are very important. One, which is called as significant risk. This question has come in the exam so many times, so I'm marking a star to this. So I want you to concentrate pretty much and understand significant risk. What constitutes to a significant risk? Now, significant risks are those risks which require special audit consideration. These are what? Which require special audit consideration. And as per this standard, there are 6 significant risks that are actually part of the standard. 6 significant risks. What are the 6 significant risks that are part of the standard? So that is what we need to try and understand here. First, whether the risk is a risk of fraud. Risk of fraud. Okay, if it's a fraud is a significant risk area, it's very important to have a complete analysis of what the fraud is, and if there is a suspicion of fraud and there is something that you would want to understand from that, check out the risk of fraud. 2, recent changes. Recent changes where? Recent changes in economic, accounting and other developments. Economic, accounting and other developments. So guys, it's a very important part which we're talking about. So significant risk is nothing but a risk that requires special audit consideration. Now when you're talking about risks that require special audit consideration, you're talking about risk of fraud. Risk of fraud, because though frauds are not the primary responsibility of auditor to be detecting it, but yes, during the course of the audit, if there is something that might attract your attention and there is a suspicion of fraud, you definitely might want to do that. Risk of fraud, recent significant changes in economic, accounting and other developments. And 3, whether there is complexity involved in transaction. Complexity of transactions. That is where serious transactions are involved, where journal entries are involving multiple number of people and multiple accounts. And then the next point is something that we have always seen as a significant risk. Risk with respect to related parties. Risk with respect to related parties. You know who related parties are, and transaction related parties may not be conducted at arm's length price. And when such things are happening that they may not be conducted at arm's length price, there is always a possibility of a fraud involving related parties. Thus, it's a significant risk area. And next area is where there is a degree of subjectivity. Degree of subjectivity involved. Wherever there is degree of subjectivity involved, now there is nothing that you can really do about it. So because there are judgmental areas like depreciation and provisions and all that, where there is subjectivity involved. Risk of fraud, recent changes, complexity of transactions, related parties, degree of subjectivity is involved, and most importantly, the last point where you're talking about changes to the situations, right? When you set up controls, there are only certain points, but there are changes to conditions wherein you have unusual transactions. Usual transactions, everybody will set up controls, but wherein they have unusual transactions, that is exactly where there is a problem. Okay, so whether the risk is a risk of fraud, recent changes in economic, accounting and other developments, complexity of transactions, related parties with degree of subjectivity is involved, and where unusual transactions are there, these are all the areas where you would want to focus pretty much in understanding what risks contribute to becoming significant risk that require special audit consideration. And moving to the last part of this standard, wherein this standard talks about areas where substantive procedures, alone, areas where substantive procedures alone do not provide sufficient appropriate audit evidence. Now, very important point this one, because we have seen this multiple number of times occur in the past, right? That there are so many areas, like say for example automated areas where entries are passed automatically, or where some of those transactions, which are fully computerized, where there is no paper trail or paper proof that such a transaction has taken place. So in those areas or in those cases, it is very important for us to understand that simply doing only substantive procedures, because you are not even finding an evidence, what will you do in substantive procedures? So that is exactly why you need to try and understand that you have to perform something called as compliance procedures, that is test of control. So these are areas where substantive procedures alone do not provide sufficient appropriate audit evidences, and that is exactly where it paves way to our next concept, standard number 330, which is nothing but responses to assessed risk. So I hope everybody has a clarity till here. So once again, let me take you through the last frame. This is what we saw, all of 315, 5 branches to that: understanding entity and environment, understanding internal controls, identifying and assessing the risk, and then you have significant risk in areas where substantive procedures alone do not provide sufficient audit evidence. I think that covers the entire standard number 315 is a very important part. Let's now move on. Okay, once again, before I move on, quick note on the timeline as to where we are. So we did talk about preliminary engagement activities, because I wrapped up stage 3. This is why I want to do this. Okay, so we talked about preliminary engagement activities. Now after we did preliminary engagement activities, which are about two things: SA210, that is accepting the terms of audit engagement, and then SA315 part 1, which is about obtaining knowledge of the client business. Preliminary engagement activities. Then we started planning and risk assessment, right? Planning and risk assessment. As part of planning and risk assessment, we did standard number 300 and standard number 320, and then as part of risk assessment, now we discuss standard number 315. So this entirely covers what we discussed, the whole of standard number 300, 320 and 315. Now it's time for us to perform the audit. Performing the audit. Now this is where exactly first it kickstarts with standard number 330 for us to, 330 for us to discuss about what did we or what should we do in terms of doing a performance part of the audit, right? So it's very important that you understand what we will be doing in terms of standard number 330. Right after this we are going there. Then after 330 we are going to discuss all about standard number 500, 501 on 3 selected items, maybe 505 on external confirmations, 580 on written representations. These are some of the basic standards that we have to actually deal with. And then we are discussing about two very important procedures that are called as SA 520 on analytical review procedures and SA 530 on sampling procedures. So if you have a complete insight of what we are trying to do here. So 330, then 500 we will be discussing now continuously as to understand what we are doing. Then in the next segment, which is an exclusive on 5 series, we'll be discussing about 501, the 3 selected items, 505 on external confirmations, 580 on written representations, and 520, 530 on sampling procedures. Also, after all this, alongside that, we will also be discussing standard number 610, which is very much useful for obtaining knowledge of whether to use the work of an internal auditor or not. Two questions: can we use the work of internal auditor, or can we take their direct assistance? Now this sums up the whole of thing. And then towards the end of performing, there is very important stage on 230 on documentation. Maybe we will be seeing that. So this is the most extensive chapter that you have in your syllabus. And then after that, we have the reporting series. In reporting, we have standard number 700, 705, 706 and 701. Now if till now somebody has not noted, and this is this nth time that I'm discussing this flow, because as long as this picture sits in your head, there is nothing that can stop you from understanding audit with clarity and audit more properly. So it's a very important piece. We will keep coming back here. This is a very important slide. This is understanding the various standards that you're supposed to, and this will give you a deep insight about what you're supposed to actually deal with. Okay, so moving further, and also of course here we can add up two more standards which you are supposed to perform: standard number 240 in doing fraud, and standard number 250 in determining the applicability of laws and regulations, which probably if we have space in our discussion we can also pull those off. But right now let's move on to 330. I hope you understood. This is video, this is revision video 1. So if somebody is watching this video straight away, we have revision video 1 which covered this. We have revision video 2 which covered these two, and now 315, 330 and bit of 500. This piece is right now our revision video 3's coverage, and it will be followed up by the other revision videos. So it's a whole series, guys. Let's do this, and I want you guys to score very high in the exam. Stay focused when we are dealing with this, and of course I think these revision videos should be of some kind of help in summarizing the whole content and making your life easy. I hope that, and if that's happening through this video, do of course let us know that, because that kind of a feedback makes a lot of sense to us. And of course, if you feel that this is going to help others as well, all I want you to do is to take it through to the others. I mean, of course, you have seen us, we have never been on point of any commercial aspect, so we don't ever say like or subscribe or share. So but if you really do find some real understanding of the standard, and you believe it benefits, now that's something not stops you from hitting the share button to somebody through a WhatsApp or your friends group and all that, where you're studying together. A mutual help is always meant, because when I did CA, none of this were there, right? So of course, maybe things can change now and things can be better. We're seeing better things happen, so I guess you should try and take that a little bit. Moving further, guys, let's now catch up with standard number 330, which is, now a lot of people are under the apprehension that 330 has been removed. Yes, absolutely, it is in the list of removed standard, but I want you to understand this, because nobody can understand audit without understanding compliance and substantive procedures. So let me take a minute to just explain you. 330 deals with further audit procedures. 330 deals with further audit procedures. Now the story in 330 is very simple. It goes by doing two parts to the standard. One is called compliance procedures. Compliance procedures. The other one is substantive procedures. Now I hope you have to have a understanding of what these are. Let us go by understanding them. A brief insight about it, because I just wanted to understand these two procedures, because the entire content of compliance and substantive procedures still would remain even if 330 is not there. So I just want you to understand what compliance procedures are in the first place. Compliance procedures are nothing but test of internal controls. Test of internal controls. So if you're making notes, make notes of this. Test of internal controls. Now very important, why are you testing internal controls? So again, I want you to loop you with the insight of what we actually are doing here. See, we did 315, right? 315, the end results of 315, which is nothing but risk assessment procedures, these pave way to determine the NTE. Determine NTE, which is the nature, time and extent of 330. Okay, so please understand that determining the NTE of 330, how much compliance you're supposed to do and how much substantive you're supposed to do, will purely be determined based on the results of risk assessment procedures. So guys, if your risk assessment procedures say that controls are operating effectively, that is when you will waste time in doing test of controls. Otherwise, why will you waste time? Okay, waste no, spend time, you can say. See, if you believe or if your preliminary understanding about the controls say that controls are operating effectively, okay, then only you will do test of controls. So compliance procedures about test of controls and substantive procedures, a detailed breakup of substantive procedures is also there. We will see the detailed breakup. Okay, so understanding this is what 330's overall point of view is. I hope you are trying to understand what we're doing. So we did 300 where we planned what we were supposed to do, and we did 315 based on the understanding of the entity and internal controls. We assessed the risk. After we did that, we are now going to decide based on the risk whether to do compliance procedures or not and whether to do substantive procedures or not. So guys, two things that are going to be interesting here again as part of standard number 330. What are we doing in compliance procedures? So concentrate on this very important point. Two questions I'm going to answer here on compliance procedures. When do we do compliance procedures and what? When do you do compliance procedures? One, when auditor expects that after you perform risk assessment procedure, when auditor expects that internal controls are operating effectively. Now this is very important guys. When they are operating effectively, that is the only time you will do this, because otherwise why will you do this and waste time? So you believe that internal controls are operating effectively, then you will do this. So if you obviously ask me the opposite, sir, if I believe that internal controls are not operating effectively, my preliminary understanding of controls say that they are not operating effectively, then straight away do what? Then straight away you will go and do substantive procedures. Straight away you will do substantive procedures. What are substantive procedures? We will see that also now. Okay. So when auditor expects that internal controls are going to operate effectively, and two, where compliance procedures alone, or sorry, where substantive procedures alone, because you're doing substantive procedures alone in areas like highly automated areas where auto posting of depreciation and other things are there. I told you that there are no paper trail. In the last part of 315 we discussed that you can't do only substantive procedures and get away with it. So therefore it is expected that you do compliance procedures in those areas. So where substantive procedures alone do not provide sufficient appropriate audit evidence, these two are the reasons why you do compliance procedures. And obviously the next question will be, what will we do in compliance procedures? As I told you, test of internal controls. What three things you will be testing as part of this? You will be testing the design of the internal control. Design, implementation, whether they designed and implemented the internal controls, and its operating effectiveness. Design, implementation and operating effectiveness are the three aspects that are talking about what substantive procedures you will be performing later based on the test of control. Because if these 3 points are covered and you have a thorough understanding of these three, it's designed well, it's implemented well, it's operating effectively, you can do less of substantive procedures, right? So that relation, after I explain what substantive procedures are, we will see it once and for all and close this particular standard. I hope it's going good guys. You guys, in this video comparatively I am slower than the other two, because these two standards are something that students have always found lack of clarity. So that's why I'm being a bit slow, though it's a quick revision. I want you to have this perfect clarity on this, and so that you don't have to waste time doing these again. Substantive procedures are further broken down into two parts, wherein it is called test of details. Test of what? Details. And analytical review procedures. You all know that it's shortly called ARP, which is dealt in standard number 520. So I'm not taking much of a time in discussing that now, because we'll be separately discussing analytical review procedures. Test of details are further broken down into test of transactions, test of transactions, which is called as vouching, and test of details part 2 is verification, which is test of account balances. So when you test account balances, this is called as verification. I think absolutely you can take a screenshot of this right now. That gives a complete summary of what 315 and 330 are all about. So I hope this particular session has given you a complete insight on 315 and 330. Guys, this is what we actually do in audit. First, do risk assessment procedures, assess the extent of risk involved in doing the audit, accordingly determine your further audit procedures, and as part of further audit procedures, first you will determine how much compliance procedures to do. How much compliance procedures to do will be purely dependent on these 2 points, that if you expect the controls are operating effectively, and then you will do this, and then you will determine the NTE of substantive procedures accordingly. So compliance will determine the NTE of substantive procedures. So everybody, I hope, has got an insight here. So let me take you back to that part where we have been discussing about how to do this. So 300 will help you plan, 320 will help you have that understanding of materiality, which will help you pave way for determining how material a particular item is, and then you will be trying to understand what exactly the risk levels are. Accordingly determine 330, which is the further audit procedures, which will let you know how much compliance to do and how much substantive to do. So we are right here, and now it's a time to kickstart the whole of 5 series to obtain audit evidences. So I hope till here everybody has had an insight. And guys who are watching this video for the first time, once again I tell you that you want go back to the last 2 videos and try and understand those, because it makes a lot of sense in having that continuous clarity, right? Okay, to wind up this particular session, I hope we are supposed to now do standard number 500. In standard number 500, we are discussing all concepts relevant to the topic which is called as audit evidence. Very important concept in audit, guys, the concept of audit evidence. So I'm going to take you through some of the most important aspects which are very relevant for our audit evidence, right? Let me mark and keep what we are going to discuss so that we can start filling each one of those. First and foremost thing, the bigger question, always ask what is audit evidence. We will figure out what is audit evidence. Then moving to the first page, if that is the audit evidence, what are the types of audit evidence, how is it classified? Then what are the qualities of audit evidence, which are very important to understand. There are very important points, that sufficiency and appropriateness, as you know, that is exactly why everywhere we are running behind audit evidence to be sufficient and appropriate. So what is audit evidence? What are the types of audit evidence that we are talking about? Because again, they're classified based on the source that they're obtained from. They're also classified based on the nature. So we are going to take that also into consideration, and the 2 qualities, sufficiency and appropriateness, and the factors that affect sufficiency and appropriateness. So all of these are some points that we are thoroughly going to discuss right now. And one of the most important points are the procedures to obtain audit evidence. Procedures to obtain audit evidence. And if we have done all of this, then we will also discuss the rules of reliability for audit evidence. Let's start with this, guys. First, I think I can fit in this very much clearly here. We will also talk about the rules of reliability towards this. What is audit evidence? Any information, anything that supports an auditor's conclusion, any information, anything, you can obtain it through written, oral, discussion, whatever, any information used by auditor. Any information used by auditor for doing what? Any information used by the auditor in arriving at a conclusion. In arriving at a conclusion, that is what is called as audit evidence. Any information, it could be books, papers, vouchers, whatever you collect, any information that supports an auditor's conclusion is called an audit evidence. Now, you also need to understand that audit evidence can be in paper or electronic form. With the amendment to the Evidence Act 1872, from the time when Information Technology Act was introduced, So evidences in electronic form are also considered as evidences, and Section 7 of the Information Technology Act also says that audit can be conducted in electronic form. So therefore, audit evidences can be either paper or electronic. Keep that in mind. So what is audit evidence, guys? Any information used by the auditor in arriving at a particular conclusion. That's what audit evidence is all about, right? Moving further, very important point are the types of audit evidence. Your types are further broken down into two, wherein I'm talking about the types which are based on the nature of audit evidence that you collect, wherein you have visual, what you see, oral, what you discuss with management and obtain, and most importantly written or documentary. Written is also called documentary, so you don't have to worry when you see the word documentary, it is nothing but written evidence. Then audit evidence is classified based on their sources, which are two sources, internal and external. These are the two sources of audit evidence. Right? I hope everybody has understood. What you see is visual evidence. What you talk to the management and gather through inquiry and confirmation, that is oral evidence, and written evidence is in the form of documentary evidences. When you get it within the organization, it is called internal. When you get it from third parties outside the organization, that is called external audit evidence. And there are two very important qualities again that you can't really talk about audit evidence without those two, which is called sufficiency. Audit evidence should be sufficient and appropriate. Audit evidence should be what? Sufficient and appropriate. Sufficiency refers to the quantum of audit evidence that you obtain. How much audit evidence do you obtain? Is that good enough? So how will you decide how much audit evidence do you obtain is good? It depends on three factors. Materiality. Higher the materiality of the item, more the evidence you have to obtain. Risk of misstatement. Higher the risk of misstatement, you will obtain more of evidence. And most importantly, size of population. Bigger the size, more the evidence. 3 points that will affect the quantum of audit evidence. Once again, that is materiality, which affects the audit evidence. Then risk of misstatement. Risk of misstatement, which is also another very important point. And then the third point, like I said, size of the population. Size of population. These are all some important factors which will affect the quantity of audit evidence that you gather. Appropriateness refers to quality. Appropriateness refers to the quality of audit evidence, which is also affected by two factors called relevance and reliability. Okay, now these are two very important words that I would like to discuss in detail. Relevance and reliability. There is nothing much to discuss about the word relevance. It is just the logical connection that you establish. So relevance as such is nothing but the logical connection with the evidence. So you don't randomly collect something. There should be some kind of a logical connection to gathering that. Reliability, 5 rules are there. We will discuss the 5 rules of reliability in the next slide. And then there are procedures. So I hope everybody is clear till here. What is audit evidence, the definition, types, qualities, and let's wind up this particular piece of discussion with procedures so we can discuss the rules of reliability and close this particular discussion. Procedures to obtain audit evidence. Right, again guys, I'm going to give you a small shortcut here, IOI. But this time it's not the common thing that we use for integrity, objectivity and independence. This is somewhat different from that. This is also IOI, but this time it is inspection, observation and inquiry. Inspection, observation and inquiry. That is what you are actually looking at. IOI, the procedures to obtain audit evidence. Then we have 4 more procedures which are talking about RARE. So IOI and RARE, these two, the 7 points totally. This is recomputation, analytical review procedures, re-performance, which is something that we will do with bank reconciliation statements and all, wherever you can gather the evidence and do it by yourself. It's all called re-performance. And then external confirmations, which is discussed in 505. So this is discussed in SA 505, wherein this is discussed in essay 520. We'll see all of that. Oh, I think that's amazing. Right now, what you see on screen is a complete summary of the entire standard of 500. That's nice. So I think you can take a screenshot of this as well, or if you are preparing notes, if you prepared it like that, I think you've covered 80% of 500 in one slide. That's so amazing. Right, let's move on to some uncovered aspects. We've discussed what are the rules of reliability. There are 5 rules of reliability, before which I would like to give you a one-liner about each of these 7. I hope you know them, but I'm just giving you one-liners. Inspection is about collecting documentary evidences. Observation is about witnessing a particular process, whereas inquiry is about asking for information from management and taking a confirmation in the form of a written representation. Recomputation or recalculation is all about doing some calculations that management has already performed, like in terms of depreciation or any provision computations or any computations, whatever they have done, you can do that. Analytical procedures is analysis of ratios and trends. We will see that in 520 exclusively. Reperformance, doing something what the management has already done. That's what is called as a reperformance. And then taking a confirmation directly from the third party is called as external confirmation, which also we will discuss in 505. So I hope this gives you a complete insight of what audit evidence is. And then to continue with this standard, we have just one very important factor to discuss, the rules of reliability. Let me move on to talk about 5 rules of reliability. 5 rules of reliability. What are the 5 rules of reliability? Reliability rule number 1, that is external evidences are more reliable. External evidences are more reliable than internal. Okay, now this is a general statement, but there could always be a possibility that our client has collaborated with a third party. There can always be a chance that third party is also under the influence of our client. So this need not hold good all the time, right? External evidence is more reliable than internal. However, right, the second point is a continuation of the first. However, if internal controls are effective, internal evidences are also reliable. Now you need not always think that only external evidence are reliable. If internal controls are good, even internal evidence are reliable. Rule number 3, evidence obtained in documentary form, more reliable. Guys, you're not saying that is the only reliable thing, you're saying more reliable. Evidence documentary is more reliable than visual and oral. To add that the same kind of a point, evidence obtained directly by auditor, more reliable than produced by management. So evidence obtained directly is always more reliable than the ones produced by management. This is only reliability. It's not like management, what they provided is wrong, but evidence obtained directly is more reliable than the ones that is provided by management. And lastly, evidence obtained in original form, documents are always again more reliable than photocopy, fax. That is photocopy or Xerox, you mean? Photocopy, Xerox, fax, digitized or scanned document, digital or scanned. So you can take digital, scan, photocopy, fax, all these as evidences, but once you definitely have to see the original documents, and then you can safely and comfortably decide that particular evidence is worth taking it. Okay. So yeah, these 5 rules of reliability, again I'm putting a start to this particular question because this has been asked in the exam so many times. So guys, that's what it is about the audit evidence, and this is very important in terms of considering how you are going to use this particular concept on audit evidence to obtain sufficient appropriate audit evidences. Because if you remember, we did talk about The very basic objective of the audit says that auditors should obtain a reasonable assurance that financial statements are free from material misstatement, and to do that you need to definitely obtain sufficient appropriate audit evidences. So from these two slides, I think the very precisely presented what exactly the whole of audit evidence, what is it, types, qualities, the procedures to obtain audit evidence, and of course the reliability part. Okay, now this also brings us to another important point, that is from the standard, which talks about use of management expert. Yeah, this is some point which most people ignore. Use of management expert. Guys, you can definitely, now management has used somebody to do their work and consider the expert's work. Now you have to consider competence, capability and reliability of the expert, the objectivity of the expert, and then you should understand the field of expertise and see whether expert's work is sufficient. If these three concepts are being checked and you are happy with this, you can comfortably use the work of management expert. Use of management expert is dealt in standard number 500, while use of auditor's expert is dealt in 620. Don't get confused. So use of management expert is very much in SA 500, and you talk about three things: competence, capability, or objectivity. These three things you have to check, and then you just have to understand the field of expertise of the auditor, understand the field of expertise of the expert, I'm sorry, and then the auditor should also have understanding whether work performed by expert is sufficient for you to draw sufficient appropriate audit evidence. If that is sufficient, I think you can go good. So this is a small point but very important one, because generally people don't tend to focus on this point. Okay, so use of management expert. If somebody asks you, can you use management expert's work, definitely it is a yes, only subject to the compliance of these three conditions. So I hope this session has given you a deep insight about 315 and 330 thoroughly, and also the entire breakup of standard number 500, and the all 7 parts of 500 are covered. So guys, if there is any inconsistency that you feel with respect to audit evidences, and you have to perform further audit procedures to obtain audit evidences to resolve that matter, which is also a very important point. If there is any doubt or inconsistency in the evidences that you obtain, then you have to obtain more audit evidences by performing alternate procedures. So that's it for this session, guys. 3 wide very important standards we have revised, and the next session is going to be a critical one, because you have all of audit evidence standards coming up there. We will discuss 501, 505, 580, and if time permits in that session only, we will be discussing 520 and 530 on sampling. I think we should do an exclusive session for analytical procedures and sampling. So next one may be a quick one, wherein we discuss about those 3 standards in detail, and also let me throw you an insight about 520 and 530 on analytical procedures and sampling. So which will complete almost like 7 chapters which are broken down in the new syllabus, right? So I will see you soon with part 4 of the revision videos.